guys, Akil here and welcome back to another video. If you guys are new, thank you so much for stumbling across this video. I am a Forex trader. I am also a trading coach and I am one of the co-founders of Tier1Trading.com. And what I do in this video, this is called the Trading Edge. It's a video that we put out for the members on our platform, both trial and premium members, showing you guys some of the ideas that are on our radar for the day and days to come, and also giving you an opportunity to practically apply what you're learning throughout the courses to the live markets. We had a very good discussion on backtesting the other day and how it's a little bit different when you're backtesting or when you're training your eye for something specific, because you usually pick out kind of the best opportunities or the opportunities that you know work. However, when you're thrown into the live market and you have this open blank space to the right side of your screen, it often becomes a little bit more difficult. So it's very purposeful to practice stuff where you see the examples as far as recognition goes and being able to identify what you want to identify, but it's also important that you practice it in the live markets as well. That way you can make sure you can identify it live and not just in hindsight. This is where demo trading comes into the picture. But what I want to talk about today is I'm going to revisit an opportunity here on oil. This is one that we've been looking at for weeks and weeks and weeks. The first part of it has played out very nicely, and now we're going to talk about phase two. And I'm also going to use this as an opportunity to talk about fibs and how I use fibs. But before we do that, do me a favor. If you're not subscribed already, make sure you hit that subscribe button. The goal is to get to 50,000 subscribers by the end of the year. I know that many of you guys watch this video, but you're not actually subscribed. Just hit the button. You can turn notifications off so you're not annoyed with emails or whatever when I produce a video. And also make sure you share this on social media. Many of you guys have trading friends, trading buddies that are in the same situation as you are. Don't hog this knowledge and be selfish and saving it all for yourself. Spread the wealth and help others learn as well. Now, what we originally had here on oil, we're going to kind of go back through what we looked at originally, was a head and shoulders pattern. This was a classic reversal pattern. I actually just had this discussion on social media. There was a question from a trader, and I'm going to get off on a whole nother rant now, but there's a question from a trader on a podcast I recently did. I recently shared a podcast talking about backtesting. It was answering some questions about backtesting, what you should do, how you should do it, all that fun stuff. Backtesting is usually a very popular subject. And there was a question from or a comment from a trader that said, backtesting is pointless. You can tell you've never made money before because no one that makes money does backtesting. And I didn't spend much energy replying to it because I just thought it was an idiot comment. But I like bringing it up because it gives the discussion gives the opportunity for people to learn. And there can be a case made for why backtesting isn't important. And I'm all for that. If you make a case for it, then we can have the discussion. If you just say something like it's pointless with nothing to back it up, then you know what. But backtesting is important for recognition. And we ended up getting on this discussion on Twitter about how market conditions change, and that's usually the big argument. Market conditions change. You can't expect the market in present day to act the same as it did in the past, and that's true. Market conditions do change, and that is the point of backtesting, to make sure what you're trading works throughout different market conditions. You can be a trend trading trader, right? Trend trading trader, right? Triple T, trend trading trader, and be involved in the market during a very trendy period. And guess what? You're going to make a killing. You're going to enter the market. You're going to think you're hot stuff. Everything you're going to touch is win. You're going to probably up your position size, over leverage yourself. And then when market conditions change and that same trend trading strategy stops working, you're going to blow a lot of money. However, if you trade it in such a way or such a strategy where you backtest it over periods of time and you see that this type of strategy works good during this type of period, but during this type of period, it gets hammered, like periods of consolidation, for example, then it's easier for you to make the decision, well, maybe I either don't want to trade this strategy or maybe I want to add a supplemental, a complementary strategy to kind of hedge myself during those periods. That, or of course, you want to see that, okay, well, although it didn't perform well during this period of consolidation, I was still able to keep my head above water. I was still treading water, and I was in a drawdown, but it didn't really sink the ship, and I was able to survive until the next trending period. So it's important that you know how your strategy works throughout time. It's also important to see and understand that despite changes in market conditions, there are classic moves, classic technical patterns that work throughout time. Historically, they've worked through periods of recession, trending periods, consolidative periods, right? They work. And one of those classic strategies or classic techniques, is the head and shoulder pattern. It's a classic reversal strategy or technique in the market. I don't know why I keep saying strategy. A classic reversal technique in the market. And the head and shoulders comes after an extended trend. It's basically the market was moving very directionally, and it's gotten to a point where it has stopped, right? We know two things about the market. We know that when the market is moving in a strong trend, the extensions are very long, right? The pullbacks are very shallow, right? You can see this is our previous structure high up here. Our pullback came nowhere close to that. And as we can see, after this move was made, what happened? Was this extension longer or shorter than the previous one? Well, I think 100 traders out of 100 traders have to agree that it's shorter. And if you don't, you may need to get your eyes fixed, right? And then we look at the next retracement after this, right? Was this retracement, I'm just gonna make these a different color. Was this retracement longer or shorter, or I should say this, deeper or shallower than the previous retracement? Well, the previous retracement came right here. Our previous structure high was up here, pretty shallow. This current retracement, right, basically came to the previous outside return, right, pretty deep. That's another sign of a trend that's losing steam. The extension gets slower, the retracement gets bigger. And what happens after that, make a long story short, is we come up, we retest, the market makes one more thrust to the downside, and then eventually that previous or that level of structure, which is going to end up being the neckline of a head and shoulders pattern, is broken, and we see the reversal of a trend. Now, when I say reversal, it doesn't mean that the market's going to explode and continue. We can always be in consolidation and reverse right back down, right? We never exactly know what the market's going to do, but doing our testing and knowing what a very specific technique or a very specific pattern is supposed to do gives us an edge, right? The market is more likely to do this than do that. And when we combine that edge, that the market is more likely to go bullish than bearish, when we combine that with proper risk management, right? My targets are bigger than my potential loss. We put ourselves in a very good position as traders, because not only do we win more than we lose, and that doesn't have to be the case, but just in this example, not only do we win more than we lose, but when we win, we make more than what we give back when we lose. And the first phase of this pattern was a retest of, was a break of the head and shoulders pattern and a retest of the neckline. And we already came to kind of the first level, which was the right above $58. And what we looked at was, where is the market going to go to next, right? When I do two targets, right? Typically I'm a two target taker unless it's a very kind of counter trendy type move. But if I'm doing two targets in a trending scenario, my first target is often very conservative. It's where is the first place of danger? And that comes from my counter trend nature. I'm not a true trend trader, so I'm kind of like reach my hand in the cookie jar, grab a little piece of cookie, and then escape before I get caught. But I do like to get more aggressive with secondary targets, because that's kind of, I don't want to say money in the bank because, or house money, because secondary targets do have to be hit a certain percentage of the time, or else it's a waste of money. But at that point, I've already made some money. I've already reduced my risk where I can't take a loss. You can afford to be a little bit more aggressive. Smart, but aggressive. And that's what we're looking at right here. So if we just zoom in a little bit, what we're looking for is a pullback trade, right? The market has been in a series of, again, where it goes extension, retracement, extension, retracement. You can see that time and time again. All right, sorry about that. Just had some tech problems in the recording got messed up. So I don't know where I left off, but we're going to kind of start over, and hopefully I can edit it later and make it look good. But we look at what price actions has been doing. We've been extending, retracing, extending. We have an area of consolidation right here, and then we extend it above that. So what we would be looking for buying opportunities here is a retracement back into that level of consolidation. So a pullback back into this previous level of structure, and then a chance to trade it up. And I'm a structure-based trader, so I always look at structure first and foremost. That's essentially how all of my decisions in the market are made. But something that we can use to complement that are our Fibonacci tools. And you know, I get talked about a lot, especially if you guys saw my videos from a while ago as being a Fibonacci trader or a pattern trader. And I don't actually put too much value into Fibonacci's, right? You'll never see me kind of use a Fibonacci on its own right. I don't believe them to be these magic numbers. I do know that they exist in the world, and the ratio from our finger to our wrist and our wrist to our forearm, how rabbits reproduce, the petals in a sunflower, all that fun stuff. But structure is the most important thing for me. That is, structure is price action. Structure is crowd psychology. Fibonacci's are a good complement, but by no means are they the say all be all. But if I'm projecting really kind of a smaller zone, so I have this zone of consolidation, I'm saying if price action comes into this zone, this is where I'm interested in entering at. If I want to kind of make this zone a little bit smaller, this is where Fibonacci's come into account. And we can start by taking this big move, right? All the way from the, let's see, all the way from the head of our head and shoulders pattern up to the highs right here. Well, you see, that's not going to give me anything. So that is pointless for me. But we can start taking our next swings, right? We have a swing right here. We have a swing right here. So let's see if we take a Fibonacci retracement from those swings. Where is that going to put us? Well, Fibonacci retracement, swing low to swing high. Okay, that'll give me a 3D2, a 50%, and a 618 all inside that level. What if I take one from the smaller swing, our most recent swing here, swing low to swing high? By the way, for you guys, you probably caught it, especially if you're a tier 1 member here, little rising channel that we had. So no surprise that we may be seeing some relief. But let's take that Fibonacci, what I say, from right here to right here. And you can see we have a few levels of confluence, right? We have a zone right here where we have a 3D2 and a 618 lining up, two powerful fibs. We have a smaller zone right here where we have a 50% and a 786 lining up. So two levels that we can dial in on within that bigger level for potential trading opportunities. Now, not only can we use Fibonacci's to look for retracements, we can use Fibonacci's to look for extensions and really make price projections. So let's go back out to the daily. It just gives me a clear picture here on the daily, and delete, right? Delete what we have here. So where is price action likely to go next? That's the question I want to ask. Well, how about I take a Fibonacci extension and I go from a swing low to a swing high right here, right? My head to my neckline and back down. What do we have? Well, we have a 127 right here where we've come to. No surprise, we're seeing a little bit of relief at that area. But if I go a little higher, I have a 1618 Fibonacci extension as well, which is kind of the golden mean of fibs. Now, going back to that Fibonacci retracement, I can also take a Fibonacci retracement from my swing high to my swing low. And what do I have? Oh, look at that. I've got a 618 Fibonacci lining up at that same level as well. Now, I told you guys, Fibonacci's are great, right? They're fun. They're helpful in making projections, but they're not the say-all, be-all. What did I say the say-all, be-all was, for me at least? The most important thing. That's going to be structure. So if I look left from this area, right, what else do I have at that level? Oh, look at that. Previous level of structure, right? We can reduce it a little bit to avoid that even handle number, but this is a good place that I can make a projection for as far as continued targets go. So that's a good example of how I use Fibonacci's. And again, they're not the say-all, be-all, but they're very helpful when combined with other things. And that's the point of trading, right? I've been talking to a trader who's interested in joining our program, and he said, Akil, here's one thing I don't want to do. I don't want to just be given a system. I'm not sure if he's tried other coaching or education platforms before, but he's like, I don't just want to be given a system and told what to do. I want to be given the tools to develop my system. And as we walk you through the different courses we offer here at Tier 1, what we're doing is we're not giving you a system. Yes, there are systems in there. There are strategies in there that you can use. But the idea is to really teach you about each individual tool in the toolkit, right? Teach you how to do this, teach you how to do that, teach you how to read this, teach you how to do that. And what happens is if you go through that the right way, you're not just looking for a system. How can I plug and play and make money real quick? But you're given the tool to develop your own. And that's truly what I believe makes a trader successful. It's not following someone else's system, because you don't really have that belief there, but developing something of your own that not only fits your personality, right? Aggressive, conservative, trending, non-trending, whatever it may be. And not only does it fit your lifestyle, right? Swing trading, day trading. If you work, it's going to be, if you work 9 to 5, it's going to be very hard for you to be a day trader. If you try to do that, you're probably going to be very inconsistent. But it also fits your philosophy on the markets. And when you learn how to trade and not just learn what to trade, you can essentially make something of your own, and it fits beautifully. And more important, you have that trust, you have that belief in it, because not only does it match your personality and your philosophy, but you've been through the backtesting process to see that it works, to see how it works. You've made all these different tweaks, and you're very comfortable and very confident in what you're doing. And that's something that many struggling traders don't have, because they don't go through that long, enduring process of strategy development or backtesting. So before I let you go, I don't have my spreadsheet up now. I'm kind of rushing. I'm on the road this weekend. Got to head down to Virginia. Man, I'll be in Virginia this week. I'll be in Virginia next week as well. I might as well buy a house down there, right? But March has been pretty slow for me. Let me just see if I can bring this bad boy up for me real quick. March has been pretty slow. This year has been pretty slow in general, but March has been pretty slow for me. I've only taken about, I usually average about 20 trades a month. I've only taken about 1, 2, 3, 4, 5, 6, 7, 8 trades so far in March, and I'm really in a little bit of a drawdown now. I'm not, and we say drawdown, we tend to put this negative kind of connotation on drawdown. Here's a look at the live trading room account that we use here at Tier 1 to kind of track our progress from year to year. For you guys that are new, we start with a 10K account, because that's usually the average of what our traders come in with. Each year we reset it. We do a standard, 2 mini lot position sizing, no money management, although we can do money management at the end of the year to kind of show you what it looks like when you implement it. But you can see by the trade log, it's not that. What do I want here? You can see by the trade log that things are starting to go a little bit sideways, right? Had a good start of the year. For you guys that have been following, been on a little bit of a hot streak, right? Started to bend off a little bit, go sideways, and then we followed that up with new equity highs. And then what happened after that was essentially a double top. Maybe if I bring this one, it'll look a little clearer. Essentially a double top, right? You can see new equity highs right here, a little bit of a retracement. Tried to make new equity highs. Looks like we made it by 15 pips or so. And now we're starting to go a little bit down, a little bit sideways. And this is what we call a drawdown. Now, again, a drawdown isn't necessarily negative. I look at this chart. I don't see any negative signs. If it were a big kind of a big crash like we saw in the euro this morning, that's another sign. But this is just sideways movement. And this is just treading water. And understand that a drawdown moves, or rather your equity curve moves very similarly to the markets, right? Where a trending market just doesn't go up forever, does it? Right? It kind of works just like our prediction here on oil, right? It goes up and then it retraces, and then it goes up and then it goes retraces, and then it goes up and then it retraces. And just as we talked about, where as long as your extensions are long and your retracements are short, you're in a strong trend. As long as you're doing this, you have a strong equity curve as well. I think the problem is many traders try to avoid losses at all time, right? They're trading fine, and then something like this happens and they start to panic. They lose belief in their system. They start either revenge trading or moving stops back to avoid losses, or taking targets early to get wins, or maybe they ditch their system just in general and go to the next thing. And you look back and realize, was this little area of drawdown, was it really a big deal in the bigger picture of the extension? What, you gave back 2%, 3%? No. But many traders don't look at the big picture. They don't accept the fact that drawdowns are natural, drawdowns are going to come, and drawdowns are something that you have to deal with. And the sooner you can accept that, the easier it's going to be for you to be a trader. And you should also accept the fact that the majority of your trading career is going to be spent in a drawdown. You know, I won't get too much into this, but if you look at this as being your new equity high, right? This entire area that we went downward, right? This is a drawdown. Guess what else is a drawdown? even when you're making money, right, until you breach this previous equity high, you're still technically in a drawdown because you haven't made new equity highs. So you spending a lot of time in a drawdown, and then typically you have a little bit of a boost, boom, new equity highs, and then you go right back into that drawdown. So try to get rid of the negative thought that comes with a drawdown. It's not a bad thing. Yes, there can be bad drawdowns, especially if they're self-inflicted drawdowns, but drawdowns are also natural. They're normal. It's like any aspect in life where you take 2 steps forward, you take 1 step back. You take 2 steps forward, you take 1 step back. And if you continually do that, you will eventually find success in life. So I appreciate you guys joining me as always for this video. Sorry that it was a little rushed and you don't have the live view of my very handsome face. But maybe I'll look at the stats and I'll see that more traders actually stay and listen when they don't have to deal with this ugly mug half the time. But seriously, before you leave, if you can do a few things, again, if you're not subscribed already, it's a massive favor if you do subscribe to this YouTube channel. Trying to hit 50,000 just because it's a goal that someone else put out for me, and I'm all about goals, hence this 5,000 push-up and 10,000 sit-up challenge. Also, share this on social media, hit that like button, and leave me a comment. I'd love to hear what you think about drawdowns. I'd love to hear what you think about backtesting, especially pertaining to the question that I brought up earlier about is backtesting worthless and pointless? I'd love to hear your opinion, and it's not because I need to hear it. I know the answer, but understand that many traders are watching this video. Many traders go through the comment section, and if there's one trader that went into this video thinking backtesting was bad, it was a waste of time, and they go through the comment section and they see a difference of opinion, and maybe one of you guys words it in a way that's like, well, I never thought about it like that, then we made a difference. We saved one trader's life out there, and that is massive, because now that one trader, he may go on to impact another trader, and then just the butterfly effect just keeps rolling on, and that's how we find success. And you can see it out there with the message we're preaching as well. We were one of the first people out there preaching this message of like, trading is hard, trading is difficult. You're not going to make $1 million right away, but you could change your life by it. And now we see so many other people buying into that and so many other people preaching it. And we're really starting to shift the paradigm, right, on what the reality of trading is. Those get rich quickers are no longer welcomed here on YouTube. The people you probably saw before this video started where, you know, trade this system and I make $1 million a day. No one listens to them anymore, right? They're becoming an endangered species. We're getting them out of here. And that's all because of you guys spreading the message. So keep it up. I hope you guys enjoy your weekend. Until next time, plan your trade your plan. Tier 1 members, we have an awesome Q&A set for Monday. We're going to talk about trend trading. We're going to talk about hidden diversions versus regular diversions. We're going to talk about the RSI swap. So make sure you join me there for the Q&A session, and keep an eye on your clocks. I know us in the US, we changed our clocks, 2 weeks ago? I think in the UK is doing it soon. So just make sure you have the right time so you can join us live. If not, you can always catch the recording. You know, I record everything I do and archive it on the site. So check it out and take care.